In the previous video, I gave you introduction about Tandon committee method of working capital assessment, and I said there are two methods. In this video, let's have a look at the first method. The first method says estimate what is their actual working capital requirement, that is current assets. Let's say the current asset requirement is 100. If so, deduct what are the other current liabilities that are available for funding this current asset. Let's say the other current liabilities available are 30. Then there is a gap of 70. Only this gap have to be filled in, and we call it as working capital gap. Now, this 70 cannot be funded entirely by bank. So there should be a margin contribution. That is, borrower should bring in margin, and a certain percentage is prescribed in this method. The method 1 says borrower should bring in margin at the rate of 25% on this working capital gap. So 25% of 70. So 25% of 70 will be 17.5. So we have to deduct that from the 70. So now you get a figure 52.5. This 52.5 is the eligible bank finance as per method 1. But whether all banks will go by method 1, answer may be no, because this is very liberal method, because here the margin of 25% is stipulated on the working capital gap, which makes very minimal contribution by the borrower, and that's why there is a method 2 which is widely adopted by the bankers, and we'll see that in next video.